Hey guys, and welcome to my first video on this channel. On this channel, I will be doing a update weekly on my Trading 212 portfolio, and this is my portfolio. Now, I'll go through all the stocks that I have got invested in, and pretty much run through why I've invested and what reason. And along with that, towards the end of the episode, I will be investing a bit more just for the next week. So I've set myself a goal this year of investing £250 per week into the portfolio. So £1,000 every month, and then I can track sort of how well we grow, what sort of dividends come in, and then I can compare this next year and adjust to what I need to do. Now, every week I will highlight which stocks I'll be investing in, why I'm investing in them, and along with any changes I'm going to do to the portfolio, just if the company's not working for what I want it to, or if there's better options and better value elsewhere. So going through my account really quick. I'm just starting off about £1,100. Now, during the coronavirus and all the issues last year and time on furlough, I spent a lot of time looking into the finance side of YouTube and beginning to understand stocks and the benefits of stocks, and especially with interest rates in the banks being so low this time world, I just think that stocks are a better source of putting my money away to earn a lot more interest and a lot more profit than if it's stuck in a bank. So I'm just going to take it slow with this account this year, and once my confidence gains with all this sort of picking the account and understanding it a bit better, hopefully next year we can ramp it up to be a bit more than £250 a week, and we can just see what we can do for this. Now, the type of stocks I invest in are mainly dividend stocks. Now, a dividend stock is a company which will pay you, it could be quarterly, it could be monthly, or it could be yearly, a portion of their profits. Now, the intention of this is, after the portfolio has grown enough, is for these dividends to become a form of passive income, which will eventually be able to pay for my lifestyle in the later years before my retirement. Now, because of this, all these will pay dividends, although varying degrees of dividends. Now, safer companies will normally pay a smaller dividend fee, and the more riskier companies will pay a higher dividend fee. Now, I've got a varied variety of them all. I've got some which do pay a high dividend, some which do pay a low dividend, but I'm investing more in the companies. I like the blue chip companies, which are reliable, they're used day to day, and what I would normally see is sort of guaranteed bankers in terms of companies. Now, obviously, if you have any suggestions, or if there's any companies in my portfolio which you have different feelings about, by all means leave them in the comments. Let me know. I'm always very open to having discussions in the comments because I think it's a good place to learn as well. I am quite new to this. I will not say now I am a financial guru. I will not say that I know exactly what's going to happen and stuff like this. This is how I want to invest. This is my opinion on investing. So if you have varied opinions, please let me know in the comments. I'd like to discuss, and if I can learn from it, I'm more than happy to talk to you guys. But yeah, just going to go through these accounts. So a lot of these you'll see is your traditional dividend companies like 3M, which is in construction, Apple, which does pay a really low dividend, but it's Apple. You are getting a sort of growth powerhouse stock while it giving a little bit of a dividend. AT&T, which is a sort of risky company at the minute. It has got a few issues, but it does pay quite a high dividend. I believe it's 7% or a bit more. Aviva, which is an insurance company in the UK. Bank of America, Barrick Gold, Coca-Cola, which is the staple of dividends. Costco, EasyJet. That Elf Beauty was a trading share which I got from a referral on Trading 212. Now, there will be a link in the description for any Trading 212 referrals. If you use my referral link, put £100 in, we both get a stock. It's something you get free just for using a link. And if you're going to sign up and put money in Trading 212 anyway, it's beneficial to both of us. And just being quick, throughout these episodes over the next coming weeks, we'll talk a lot more about my stocks and why I've done it in detail, and we'll go over what I think is better. But just going through some of the bigger ones, Nike, Microsoft, just reliable. Pepsico, similar to Coca-Cola. I believe it can have a little bit of a negative impact to have both of them at the same time, but they both have sort of different reasons. I think Pepsico is a bit more diverse, but Coca-Cola is just so reliable with the dividends, and it's always pushing to grow that dividend. Realty Income Corp. Now, at the minute, I know that real estate is risky in the pandemic, but it's a very high dividend. It continues to pay, and it's just something which is which it's a bit of a risky one, but that's what I like. So I'll have a bit of risky investments in my portfolio. Royal Dutch Shell. Now, along with Total, which I also have, these two do pay quite a high dividend because they are oil companies. Now, obviously with the push in the world going towards greener forms of energy, they are sort of highlighted a bit of a risky investment. But working in a construction side of the world, they are still very much a key part to it. And I believe especially Shell and Total in particular, compared to other oil companies, are making more of an effort to move into green energy. Now, green energy for both of these companies won't be a quick time thing, but it won't for any sort of company. So I believe there'll be a long pace with all the others. So for me, those are two of my bigger investments in this portfolio, and it probably will be for a considerable amount of time. And then just your standard stocks, Starbucks, Royal Mail, which there are quite a few sort of delivery companies in this. And from what I saw during the pandemic is that haulage delivery companies do seem to be the way forward. People are sort of, were restricted to going out, so we were just ordering in. So any form of haulage and delivery company was successful. And for my portfolio, I do like to have a bit of security. So we do have 3 Vanguard funds in this. The FTSE 250, a all-world high dividend yield, and the S&P 500. I believe this gives me a form of base in my portfolio, and it just helps give me a bit of diversity as well. And one of my other big holdings in the portfolio is Walt Disney. Now, Disney, although it was hampered with the fact that no one can go in their parks, I believe their streaming service is really moving forward and will be sort of the main focus for Disney in the next coming years. So I can only see that growing. Although they've stopped their dividend for the time being, I do believe it will be brought back in the time and it will be increased because they are doing so well throughout that streaming service. Now, just looking at the portfolio as well, I will leave a link to my pie just in case you were interested. Now, we do have about £1,000 of free funds, which I haven't invested in my portfolio in a little while, which is a bad move on my part. It has been about a month, but Christmas and all that, I wanted to make sure I had enough money available. And because of that, this first week we'll put £1,000 in. I'll go through all the accounts we're going to put that in. And after this, it'll be £250 a week. So I'm just going to pick out these companies and I'll just go through what I'm going to put in and why, and then we'll go from there. So our first company to invest in, we are going for 5 shares of Royal Shell, and that will be for £70. Similar to Shell, I'm going to buy 2 shares of Total, which will just be under £70 as well. I like to keep them both the same, as I don't favour one company over the other. So we're also going to pick up just one singular share of Apple. We'll just keep building that up throughout the year. Going to pick up some AT&T as well, along with some Royal Mail. This has been doing really well for me lately, so I'm just going to make sure to buy a bit more. We're just going to buy 8 shares of that. That as well. Microsoft, dependable, like Apple, it will only be going up. Even though the share is very low, they have made a bit of a history on making sure to increase it year by year. So that is something which will only progress, and I think having Microsoft is not the most risky investment in the world. St. James's Place is an investment company for the UK, which I do use myself, which is why I use an investment account and not an ISA. 4 shares of that for £50. Nike is dependable. 0.5 shares for Nike as well. And the Vanguard funds, I'm going to put a fair bit in the Vanguard funds because a bit of diversity at the minute. I do believe there might be some volatility coming up, especially with America and all the issues over there with the election and changing. So I'm just going to buy 1 of each of the stocks, including the S&P, Disney as well, because of these streaming services doing so well. I do think it's a bit overvalued at the minute and a bit high of a price, but consistent buying is never an issue. It will always dollar cost average out, and eventually it will settle on a price. I think Disney is one of the real growth stocks of 2021, and it will be one which just keeps going and going. So just checking the portfolio now. We still have £400. I'll keep buying, and I'll come back with buy. So that's pretty much my account. So I'm just waiting for the rest of those orders to buy, and I can give a full update in the next episode of what bought, and we'll also do another £250 worth of buying of stocks Now, I must admit, the website for Trading 212 is nowhere near as good as the phone app, in my opinion. So for the next couple of episodes, we might be sticking to the website till I can get a way of involving the phone app, just because I think it's a bit more user-friendly, looks a bit better, and it's a bit cleaner. But this is pretty much my stock portfolio. Now, if you have any suggestions or any thoughts on my portfolio or any comments you'd like to leave, I will try my best to reply back to them in the comment section. But yeah, that's the first video. Hope you've enjoyed. If you do, please like and subscribe. We are looking to do this once a week for the year, and I can have a full breakdown of what we're doing in my portfolio. And at the end of the year, I can show you how we've done compared to other things like the S&P or other sort of ETFs, and we can go from there. But yeah, if you enjoyed, guys, please like the video, and we will speak next week.